Yes, so I just wanted to record this a quick video for you guys. So I'm starting a new playlist called One Twist Per Trade. Inspiration of it comes from the stories I used to write. I used to write short stories, and they were used to 15 to 1200 or sometimes 2000 words long, and they all had one thing in common. They had one crazy twist. Uh, I posted my stories on blog. I wanted to go with the same experiment on this series as well, this playlist. So I just like this quote, shows the importance of time, and this is the banner, the one twist per trade. I will have traded gold today. I will quickly go ahead and explain this. I was just recording this in my notes and journaling it, so this is why you see so many markings here. So first one is copper, in the middle it's gold, and then silver. Uh, so the way I trade is first I look for a crack in correlation, and so yeah, first thing that I look for is crack in correlation. Then I look for right time. Actually, first I check if there is any crack in correlation. Then I check if it is happening on right time. And once I'm sure about two things, then I look at the sequence, reversal or continuation, continuation sequence. And so these are the main thing that I look for. So here, uh, in this trade, you see that this FVG created the crack and correlation, as here this FVG was on this candle, so it was too low, and in this, so the price went too far up and above this FVG, which was supposed to be formed here in this candle. So this is why I was ready with the crack and correlation. This is 15-minute chart, and I did review the 1 hour and 4 hour chart as well. They are good. 15-minute and 1 hour chart is the sweetest spot, and looking at the 4 hour time frame price action, I mean, it works like magic. In They all work like magic altogether. So like market should be correlated. When there is a crack, there is a reversal or reversal in the price. So this is what I look for, the crack and correlation. Also, like I said, I wanted to like share at least one twist in a playlist. So the twist will be either it will be something that I know and notice myself and that makes the trade high probability, or it is about something that I noticed on some other trader using the same and that makes the trade high probability. So it will be either something I notice, or either that is something that I've learned from someone, and you can use that as well. So here the concept is, if the price before London session, this is London kill zone, before that, if price has taken Asia on a couple of cycles liquidity, like Asia, New York PM session, here it has taken the liquidity already. So now at 3 a.m. in New York time, you can expect the expansion of the price. So since it manipulated up in this direction and there is a crack in correlation, so reversal is imminent, and where it will expand to in the like lower direction, and it will what it will target some time based liquidity, which is here the Asia's low. So this is the kind of concept that made a lot of difference in trading London session. This one twist, that when London will expand and when it will manipulate. If suppose it has not taken these liquidity, then it will manipulate first and then it will expand or reverse. So this is what you need to keep in mind, that whether London, what all London has done before 3 a.m. in the morning, New York time. So this is what I've taken so many trades on this same concept. Due to my time constraints, I cannot trade only London most of the time, and this strategy, this one fact has made all the difference. It helped me trade London really well. I used to think that London is low probability and it cannot be traded profitably for a long term, but now most of my London trades are profitable, most of them, unless I do something, force something, like beat something out of the market which is not there in the price action. Only then I lose. So I hope you like this technique and hope you will use it in future to improve your trades. So crack in correlation. Now the second thing, time. So I usually trade the first lander macro and or the second one, wherever in whichever one there is a high probability trade setup. So again, I'm not referring to this macro 2:33 to 3 a.m. macro. I'm going to the classical macro time, 10 hours before and 10 hours after, or 15 minutes before or 15 minutes after. So these two works really well. So in this one I've shown 10 minutes before and 10 minutes after. And when you reach to a right crack in correlation, then it's all about time, whether it has happened on the right time or not. So here in this time, in the macro time, 10 hours before, 10 minutes before and 10 minutes after the hour at 3 a.m. in New York time. Now you see that this price has taken this high in gold, but it has not taken that in silver. So you see that there's a crack in correlation, and then I shorted and I targeted 2.5 standard deviation. But as a habit, uh, as a bad habit, I closed the trade in the beginning of this candle. But since the trade was really good and like there was force in the market to the sell side, towards the sell side, I made $419. So the first trade, I was very happy. I just wanted to close today in green and like feel happy about it all day, all night. So that's what I did. Close the trade, did not take any other trade. And another reason was there to be more confident about it is there was a like red folder news in London session. So that was another factor. And when there's a red folder news in the session, I mean, it tends to be the high probability. So like good, like high probability news, crack in correlation, right time. These are all the recipes for a good trade. I shorted and always I target 2 to 2.5. This is something I learned from Dexter, and his power of three concept are really amazing. They help me. So this is what I'm using here. So most of the things I have like a method of my own, like a Sudoku puzzle. You have a few key ingredients and you do not have many of them. So like a Sudoku puzzle, you look for other numbers, other numbers that will fill the squares you got on your puzzle. So this is what I'm doing. Like I adopt one strategy from one guy if I like it. Most of them are like developed by ICT himself and some other people, and but other people, other traders have noticed good things and like made the strategies their own and they use it well. So this minus 2.5 standard deviation from Dexter is amazing. You should use that as well. And yeah, I wanted to finish the video really in a short time, so this is why I'm trying to rush. But I can like give it a long time, but there is no point. So here, that was the funded account trade. Now this one is a like practice demo trade. So what I did, I followed the same setup here. I at 8 p.m. macro, like 7:50 to 8:10, I missed the trade because I was not on my system. I was doing something else. So there was a crack in correlation here. If you notice, this price took this low, but here it did not take the low. So this was a crack in correlation. Price was going to jump higher. There are a few other reasons behind thinking that this is high probability. I will share them in detail, but not today. I'm keeping some things to myself. Just kidding. It was the SMT, and since it made the swing low, I was confident that now price will jump higher. And when it crossed this 15-minute fair value gap, this yellow marked gap, I was very confident that it will go at least to the 2.5 standard deviation, like presented by Dexter, not Dexter Morgan. So then what price did is price did not reach to the like 2.5, and another macro time was there. So after 8 it was 9 a.m. now. So 9 a.m. New York time. So since it was 9 a.m., price manipulated lower. Normally, as per Dextra, at between -1 to -1.5, price tend to reverse a little bit and then continue higher if it is going in a bullish direction. So that's what happened. Touched -1 and then like reversed. Took this liquidity and this fair value gap, and this is a kind of classic double purge. Took the liquidity of this area, this 30-minute section. Price first took the liquidity up and then down and then continued in the first purge direction. Uh, Double purge from like MMXM trader. Amazing concept, amazing. I use it often, especially when I'm sure that price is bullish and it has taken liquidity both side. I know where it is going. This is the sequence I was talking about when price starts following these like order blocks, inversing FVGs and everything. So price inverse this 15-minute FVG again. So in first trade, my SL was hit because SL was right here. So it was hit, and then again I took another trade because setup was intact, and price had to go from one 15-minute fair value gap to another. This is another 15-minute fair value gap and an order block. So I was waiting for price to reach 2.5, but it was like too choppy here, and 9:30 was approaching. So even in practice, I do not like try to disobey my rules. I follow them. So since this was a very strong resistance point, I took two partials and then finally trailed my SL to this point, and price took the SL in profit and then moved on to the target. I left it so that price can hit this 2.5 level and with remaining macros, but price first took my SL then moved on. So that's absolutely fine. And since it was 9:30 manipulation going to happen, I thought it might go down further and then go up. So, and these are the equal lows, so price loves it. So I was not going to risk it. So I closed all my trades. So the first SL that was hit here. Yeah, it was for it brought me loss of $120. First partial here I got me 148, then next one 72, then SL in profit was his for $126. Yeah, so that was all about this. So just remember that I'm making this playlist for you for free. I mean, I have learned everything for free, so it's only just to give away everything for free. And yeah, so I will be making a lot of videos on it and posting whenever I'll share something that has real twist in it. I will add that in this playlist, and so you can enjoy it. Just remember, it's time then price. Good day.